helpful way to visualize kind of the dynamics of hash price and its components is to look at some major case studies of significant events that have happened in Bitcoin mining. So we're going to cover quickly the China's mining ban, which happened in 2021, and the last halving of the block subsidy, which happened in 2020. So to start with the China mining ban for a little bit of background, before May 2021, China had about 50% of the global hash rate in its borders. And so when China came out and banned Bitcoin mining and other crypto trading, there was obviously some very negative price action in the price of Bitcoin due to that policy. But we also simultaneously had a drop in network difficulty and hash rate as a function of those miners shutting off their operations and eventually moving elsewhere. And so what's really interesting about this case study is the interplay between the fall in Bitcoin price and the fall in network difficulty, and seeing how they interacted with each other. What you can see is that there was a fairly precipitous fall in the price of Bitcoin from just under 60,000 to just over 30,000 between the beginning of May and the end of June. But you also had a fairly significant drop, about 42% or about 52% in network hash rate thereafter. Which is to Matt's earlier point about network hash rate and difficulty moving in the opposite direction, oftentimes, of the Bitcoin price. You can see what the result was here. The result was you had an initial drop in hash price from the Bitcoin drop. However, as miners turned off and came offline in fairly significant fashion, actually more significant fashion than it's ever happened before, you had a rebound in hash price due to network difficulty becoming lower and hash price becoming higher. And so, we have an example here of a trader or an investor that put on a trade for a 4-month hash price NDF, locked in at the unit hash price, which is that red line. So a fairly healthy discount, but also a fairly large duration. And you can see that over the course of the contract, the yellow line, which was their settlement, or the orange line, which is their settlement rate, which is a rolling average of the yellow line, which is the hash price. You see that even with these significant events, with the fall of the price of Bitcoin, a trader who was taking a healthy discount on a long duration trade was still able to weather that storm and generate a profit due to the mechanics of difficulty offsetting the fall in the price of Bitcoin. So it's just an interesting case study to look at and see how the different components can impact hash price. Quickly, last one before questions, if you can go to the next slide, is looking at the last halving, which happened in May 2020. And so again, this was a major event, but what was different this time in terms of what happened versus the China ban is that this was a completely telegraphed event that everybody would have seen ahead of time. And what the block subsidy is set in Bitcoin's code. So any miner or trader would have been fully aware of the halving upcoming. In contrast to the previous case study, and what we found is during this period, you have Bitcoin price stay fairly flat. You have network difficulty drop, temporarily, but not for nearly as prolonged a period of time as the China mining ban, and really recover within a couple weeks time. So it's hard to say if the halving is what caused the drop or if it was just kind of regular course of business. And you had a run up in transaction fees, which on this bottom chart is that orange line, which again, to Matt was referring to earlier, sometimes you see these run ups in transaction fees. You see the orange line on the bottom chart shows transaction fees going from about 0.2 Bitcoin per block to about 1.4. So it's just an interesting thing to keep in mind there. The net effect of all this, if you go to the next slide, is really not as exciting as a takeaway as you'd think, but it's a good thing to see, is that you had a fall in hash price of about 50%, corresponding roughly with what you would expect from a 50% drop in the block subsidy from the halving. Now, a trader, the example we showed here is a trader that took a 50% discount going into this period, and they were able, by having an understanding of network difficulty and of transaction fees, to generate alpha from that position. And so these are two interesting kind of large macro case study events that have happened in Bitcoin mining, and they show you how an understanding of hash price and its different components can lead to trading strategies that might not have been previously available.